This is Don DeBartolo, a senior commodities broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight advisory service. Trade Spotlight is broken into three segments, though it's one advisory: the Trade Spotlight Futures, Trade Spotlight Commodity Options, and Trade Spotlight Future Spreads. This is Beyond the Spotlight, a weekly video that spotlights two or three markets that may become trading opportunities for the week ahead. This week starts with Monday, August 12th, 2019. Please pause the video now and read the disclosures to understand the risks involved with futures and commodity options trading. I want to show you what an email looks like from the advisory service. We recently updated our email service, so it's got a different look. You still get the timestamp to the right, so you know when the recommendation comes out. A write-up of the trade recommendation, so the thinking behind the trade. You have the specific entry price and the risk-reward parameters, whether it's a stop loss and limit order, or if it's an option contract, the price alert or the liquidation point, potentially a risk graph as well for writing an option. And then you have any important information such as margin requirements, delta, option expiration dates, everything you need to know about the trade recommendation, and a chart, so you can see a view of the chart behind the trade recommendation. So there's a USDA crop report on Monday, August 12th. That'll be released at 11 a.m. Central Time. It's the supply, demand, and crop progress report. This will be very volatile, potentially for the grain markets. So for today's video, I want to look at three different grain markets that are setting up potential opportunities. We'll see if this report will affect those opportunities, but the breakouts may come right away. So stay tuned. There may be some trades in either of these three markets, either before the report or after the report. So the first market is December 2019 Chicago wheat. I have a upper trend line drawn off. The first point being the 12-month contract session high. That price is 565 3/4 from June 27th, and then that runs down to Friday's session high. That high is 506 1/4. First, I see the 20-day moving average and a 50-day, 200-day moving average pointed lower. Potentially, the market can break this upper trend line and reach these moving averages here and find some resistance at this point. There's a lot of trading activity in this range, about the 520, 525 trading range. Also, you have your momentum up right now, and the trend is rather flat. This is the MACD indicator. Potentially looking for the market to actually trade up to this level and then roll back down. An entry could come on a break of this low, though you can see that's at 475. That's quite a bit down there. So potentially one of these other recent lows would be used as a potential place to sell on a breakout, as long as the trend hooks down and the stochastics hooks down, showing some momentum. So we can sell the contract on a momentum entry technique. Potential target would be down here at this 12-month contract low. That price is 442 1/4. That's the May 13th contract low. Potential stop losses would go above these recent highs. Really depends when we sell the contract. We'll look for a potential resistance level to place that stop loss. Okay, the next chart that I have here is also in the wheat complex, but this is the December 2019 Minneapolis wheat. This is also called spring wheat. This is a protein-rich wheat contract. So it does trade a little bit different than the Chicago wheat or even the KC wheat. That's that hard red winter wheat contract. You can see you also have a reversal of what we saw with the Chicago wheat contract. We have a potential double bottom here. This low back here from May, that low is 529 1/2 from May 6th. And then this low that we just put in last week, that is the actual 12-month contract low, 528 even from August 1st. So you have a double bottom formation in place. We have the market in a sell-off. You can see these moving averages are pointed down. Then now the market is trading sideways. We've been in this tight range here over the past 7 trading sessions. So I'm actually looking for an opportunity to go long this contract on a breakout to the upside. But right now the MACD is flat, the trend is flat. There's still some momentum to the downside. So I'd be looking for both of these indicators to hook up before we got into any long positions. Upside target can be this 50% Fibonacci retracement of this sell-off here at 560 even, or we can even have a target going all the way up to the 593 even contract high. That contract high was put in on June 12th. That's not the 12-month contract high. That goes back into January, February. There's some highs we were above $6 in this contract, but those are two potential targets. Stop losses would go below this range down here and these contract lows. And the third chart I have is December 2019 soybean oil. Soybean oil contract broke out of this range already with the big bar day Thursday and the follow through on Friday. So I'm looking for a pullback down to potentially this 200-day moving average at 29.46 or down to these recent highs or even this trend line that I drew off here. We'd really like to see a pullback before we get long, but do want to get long. There's a lot of momentum to the upside in this market and the trend flipped. There's a lot of trading volume too behind this move. I think this contract has potential to break these highs and even break here at this 32 price level. My target would probably be beyond there, so I didn't draw off a line there, but that could potentially act as resistance. So potentially that's a first target if there was multiple contracts traded. So again, looking for a pullback in this market first before getting long, but all the bullish signs are there. Hopefully we get that pullback to catch the contract at a better price. This is my contact information. If you have any questions about the charts that I covered here today or just the markets in general, my local and international number, cell phone number, and toll-free number, or you can email me at tradespotlight@danielstrading.com. If you're not following the Trade Spotlight, I would love you to do that. You can trial it for 90 days, or if you're a client of Daniel's Trading, it's a free resource. Just go to the Daniel's Trading webpage, click on Advisories, and you will find Trade Spotlight. I've got an overview and a link to subscribe to the whole suite. It's 3 different segments, but all one advisory. Or you can review some recent posts from the Trade Spotlight, the weekly and monthly summaries, or past Beyond the Spotlight videos. Thanks for taking time to listen to this video, and happy trading.